Hey traders, it's John Fortune here of this week's Weekly Forex Forecast. We're going to run through over 30 markets as we always do, highlighting targets in each market for the week ahead. As we go through the markets, we're going to build out a high probability watch list along the way for next week. And it's a data-driven watch list. It comes from currency strengths matching the strongest versus the weakest currencies. So I hope you're having a great weekend. Let's dive in with the DXY. We noted last week's video that the total number of trending markets was down from 69% to 29%. And this decline was indicative of the markets getting choppy, getting corrective. And when this happens, I reduce the amount of risk. I reduce the amount of trades that I take in the markets. And going into this week, the markets are down further, trending markets from 29% down to 19%. So what this means is the markets are continuing to correct. And if we look at the DXY, we've been trading the DXY to the upside pretty much all year. Although for those of you who follow the forecast, you will know that I do have a bias to the downside on the DXY fundamentally, and I will be looking for the DXY to roll over to the 88.46 at some point. And this correction, or this move to the upside rather, which we've had since the beginning of the year in the DXY, I currently view just as a correction. I think we are coming down to the 88.46 at some point. The fact that total number of trending markets has really dried up and declined is a sign that the DXY may be now rolling over, because as the DXY rolls over, as it tops out, the markets start to get choppy, corrective, and they start to turn as well. So the first thing to note is going into next week, I will still be trading lightly as opportunities are fewer and further between than they were previously when we were looking at the markets. And although the DXY is currently structured to the upside, you can see we've had no breakouts here. This is still trending to the downside. We would really need to see the market breaking out and pulling back in order to start to reaffirm a bullish bias on the DXY, start to look for those DXY strength trades. However, I would not be surprised to see this just rolling down, taking out 91.30 next week. So going into next week, to cut a long story short, I go into next week with a neutral bias on the dollar, a slightly bullish to neutral bias, and I would be prepared to trade the dollar pairs on their own merits without a strong bias in the dollar one way or the other. Crude oil. I have been bearish on crude oil over the last month or so, and we came down, we took out one of the targets set in previous videos, I believe almost to the pip, and we just started to move sideways. We didn't really go any further down. Last week we broke higher, and we do have a nice breakout now in crude oil. This is in line with its overall trend, so this goes down on the watch list next week as one to watch. I quite like this market. Any correction in crude oil next week will be viewed as an opportunity to look for bullish reversals up towards the next key resistance, the upside, the target set at the 65.42. Euro dollar. I've been bearish on euro dollar in previous forecasts all the way down here, and last week we finally reversed to the upside, and it does look like we may be starting the next leg up, especially if we pull back and we start to put in an inverse head and shoulders here. What I would like to see next week is a correction in euro dollar. I am bullish. I'm only looking for long positions in this market as it's structured to the upside, and I have a neutral bias on the dollar. Especially if the dollar starts to break down next week, I would be interested even more in euro dollar to the upside. What I would like to see is any pullback in this market, and notice how this just corrected and then reversed. There was no real reversal in here. We're just making higher highs and higher lows, higher highs and higher lows all the way to the reversal. So if you're looking for bearish breakouts, for example, in this market, you filter out these reversals. This reversal, you don't take any trades in this because you're waiting for the market to reverse, and it doesn't. It just turns around before you get those breaks to the downside. So very simply put, the same applies going into this week. Any pullback in this market is going to be viewed as an opportunity to look for bullish breakouts. And I'll be looking up towards the next key resistance, the upside and the target set at 1.2061. Next is pound dollar. Pound dollar is structured to the downside, so opposite to what we saw in euro dollar. Euro dollar structured to the upside, pound dollar to the downside. So this adds some weight to euro pound to the upside next week. I wouldn't be surprised to see euro pound appreciating next week outside of the dollar pairs. Very simply put, as this is structured to the downside, I'm only currently interested in bearish reversals in this market down to the next key of support to the downside and the target set, the 1.3620. I think what my preferred trade in pound dollar would be, however, is if we start to break lower in the DXY next week, you can see we're forming, although this is not yet confirmed, so we still have to be bearish, but we're forming a potential double bottom. That would be confirmed on a break above the 1.39180. And if we break the 1.39180 and the dollar reverses to the downside, this would give the green light for long positions and start to look for bullish opportunities in pound dollar. Dollar yen doesn't make it on the watch list. It is structured to the upside, but I think there are probably better opportunities out there next week, and the watch list has slimmed down even more since opportunities have dried up even more in the markets currently. I would like to see a reversal in this market if you are looking to trade this, and I would be looking for long opportunities up towards the next key of resistance, the upside and the target set in this market at the 109.83. Next is Aussie dollar. Last week Aussie dollar was a good market. We took out both targets and we finished the week right at the second target, taking it out almost to the pip at the 0.7757. That was pretty much the high of the week in this market. Coming into this week, this is one of the better dollar pairs that I like. We have this inverse head and shoulders, and as a result we were looking for a breakout to the upside. We have nice momentum, so any correction in this market, although it doesn't make the watch list, any correction in this market would be viewed as an opportunity to start to look for bullish reversals up towards the next key of resistance, the upside and the target set at the 0.7810. So I do quite like the way this market is technically structured going into next week. New Zealand dollar. New Zealand dollar is structured to the upside, and I also like this market now going into next week. We had this correction, but we finished it with a big rally to the upside, so we have momentum. There's a good chance we see higher highs in this market, so any pullback in this market next week will now be viewed as an opportunity to look for bullish reversals up towards the next key of resistance, the upside and the target set at the 0.7221. Dollar Swiss franc. Dollar Swiss franc is structured to the downside. It looks like we may be forming a head and shoulders in this market. So any pullback towards the 0.94040 doesn't have to come all the way back, but any pullback would be viewed as an opportunity to look for bearish reversals in this market down to the next key of support to the downside and the target set at the 0.9102. Dollar CAD. Now going into this week, dollar CAD does make it to the watch list, and this has been quite a corrective market. I've stayed away from this market for the last few weeks, but it now does look like we could be set to decline. And what we're seeing here, although we haven't reversed in the DXY, a number of these other markets are showing us that the DXY could very well reverse and break lower next week. So very simply put, going into this week, I am focused on short positions in US dollar CAD. Any correction would be viewed as the opportunity to look for short positions down to the next key of support to the downside and the target set at the 1.2436. Next is gold. Now gold is structured to the upside. We've started to finally break out of this choppy sideways move we've had in gold, and we have some nice momentum. So I do like gold going into next week as well. Although US dollar CAD is the only dollar pair to make the watch list, I like Aussie dollar to the upside, New Zealand dollar to the upside, gold to the upside, and I also like US dollar franc to the downside out of the dollar pairs. So very simply put, any pullback in this market next week would be viewed as an opportunity to look for bullish setups up towards the next key of resistance, the upside and the target set at the 1807.87. So as I say, US dollar CAD is the only one to fully make the watch list, and this is the one I'll be focused on the most. However, I will be keeping an eye on Aussie dollar to the upside, New Zealand dollar to the upside, gold to the upside, as well as US dollar Swiss franc to the downside next week. Moving on to the euro and the yen pairs, euro yen is structured to the upside and it does make the watch list this week. I have been bullish on this market, but the market just hasn't gone anywhere. We've just been moving sideways. So this is not a reversal. I am still bullish, but it's just taking a breather. It's just taking a pause. So any correction in this market, once again, will be viewed as an opportunity to look for bullish reversals up towards the next key of resistance, the upside and the target set at the 131.17. Franc yen, structured to the upside and on the watch list next week. Similar to euro yen, it's just kind of pausing at the moment, but I do still have a bullish bias on this market. And the bullish bias from the data is primarily coming from a weaker yen, and you'll see this theme as we go through the rest of the charts. So any correction in this market next week would be viewed as an opportunity to look for bullish reversals up towards the next key of resistance, the upside and the target set at the 119.25. Pound yen, also on the watch list this week, and again primarily because of the yen weakness. We've started to break out already, so very simply put, going into this week, any pullback in this area would be viewed as a great opportunity to start to look for long positions up towards the 151.520, and if we can break through here, we're going to be looking up towards the second target at the 152.75. Aussie yen, I don't really like this chart going into next week, although it does give us a bit of information, which is that the Aussie is structured to the downside against the yen. So even though the yen is weak, the Aussie is actually quite weak compared to a number of the other currencies as well. So very simply put, if you are looking to trade this, you should really only be looking to the downside as it currently stands. However, because of the yen weakness, as I said, I would not be interested in shorts. What I would prefer to see is a break above the 84.48, and then I could start to look for long positions in this market next week. So personally, I'll be filtering out shorts to the downside, and I'll be looking for this to break the 84.48 to start to initiate long positions and look for bullish opportunities next week. CAD yen, it does make the watch list this week, and again, primarily because of that yen weakness, but we're also seeing oil start to pick up, which is supporting CAD somewhat. We're trending to the upside here, and this is just simply viewed as it stands as a correction. So any breakout to the upside in this market would be viewed as an opportunity to start to look for long positions into the next key of resistance to the upside at the 88.47. New Zealand yen. New Zealand yen is structured to the upside. We have some nice momentum, so I wouldn't be surprised to see higher highs in this market, and it does make the watch list again. Theme being yen weakness going into next week. That's what the data is pointing to. The overriding theme, of course, is that the markets are choppy, and so risk should be reduced. But out of the markets that are there, the yen pairs are looking like something to keep an eye on for next week. So any correction in this market would be viewed as an opportunity to look for bullish reversals up towards the next key of resistance, the upside, and the target set at the 78.67. Euro franc. Euro franc is structured to the downside, so I'm only interested in shorts in this market if I am trading it. We're looking for a pullback towards the 1.1070 for a sell-off, and we started to see that already. So any correction towards this level, once again, is simply going to be viewed as another opportunity to look for bearish breakouts in this market down to the next key of support to the downside and target set, the 1.0956. Euro New Zealand. Euro New Zealand looks to be correcting. I'm not a big fan of this market going into next week. I think there are better markets out there, even the ones not on the watch list, like the Aussie dollar to the upside, New Zealand dollar to the upside, gold to the upside, etc. So if you are looking to trade this, and I probably won't trade this next week, I would only be focused as it stands on bullish setups. And if we start to break to the upside, that would be the indication we can start to look for long positions into the next key of resistance, the upside, at the 1.6916. EurUsd. Now EurUsd is also getting slightly choppy as the dollar sells off, and that's because both the euro and the Aussie are two of the primary beneficiaries of a dollar sell-off. So going into next week, I think there are probably better markets. We pull back to the 1.54520 we highlighted, so any reversal from this area would be viewed, if you are looking to trade this market, as the opportunity to look for long positions into the next key of resistance, the upside, and the target set at the 1.5680. Euro pound, shorted this all the way down since the beginning of the year. We've been highlighting this over and over again to the downside in the weekly Forex forecast, and we have recently reversed to the upside. So looking back as well to what we discussed, euro dollar structure to the upside, pound dollar structure to the downside, I wouldn't be surprised to see this head higher this week. So outside of the pairs off of the watch list, this is also one that I'll be keeping an eye on. So any pullback in this market next week would be viewed as an opportunity to look for bullish reversals up towards the next key of resistance, the upside, and the target set at the 0.8740. We're coming quite close to the target, so I would like to see a pullback in this market deeper first. And wrapping up the euro pairs is euro CAD. We look to have finished the 1, 2, 3, 4, and last week I was looking for this fifth wave into the 1.5053 last week. We did have this fifth wave, but we just missed the target by a few pips. Very simply put, now it looks like we finished these 5 waves up. I would not be surprised to see a deeper correction and see this market getting a little bit choppy. So I have two options here. Either I can buy this market next week, or I can do nothing because it's currently structured to the upside. So for me, I will be doing nothing in this market almost certainly next week. If you do want to trade it, however, the opportunity would still be to the upside, looking for this fifth wave to take out the target at the 1.5053. So any breakout would be the opportunity to look for that target. Pound franc. Pound franc is structured to the downside, does not make the watch list. Any correction in this market would be viewed next week as an opportunity to look for bearish reversals, and we have some nice momentum in here, forming a potential head and shoulders pattern in this market. Any bearish reversal would be viewed as the opportunity to look for short positions if you're looking to trade this market down to the next key of support to the downside, the target set at the 1.2575. Now, although a lot of markets were corrective and didn't really move last week, Pound Aussie was a market that did move, and we took out both targets to the downside. And the second target at the 1.7745 we took out almost to the pip, and that was the low of the week last week in this market. Very simply put, going into this week, we have some momentum. Out of all of the markets not on the watch list, this is another market which actually looks quite nice. Technically, we have nice momentum. We're starting to pull back for this kind of bear flag pattern. So any correction in this market would be viewed once again as an opportunity to look for bearish breakouts down towards the next key of support to the downside of the target set, the 1.7695. Pound CAD, I still have a bearish bias on this market. This was another market that really just didn't go anywhere last week, and not surprising because, as I've pointed out a number of times, we have very corrective markets right now. So any correction in this market once again is simply viewed as another opportunity to look for bearish breakouts down towards the next key of support to the downside of the target set at the 1.7051. Pound New Zealand doesn't make the watch list, but I was bearish on this last week and I am bearish on it again this week. We took out both targets to the downside, very similar to Pound Aussie, and again the second target pretty much was the low of the week. We took it out almost to the pip at the 1.9177. Going into this week, I also like this as well as Pound Aussie to the downside, and it's for the same reasons I like those two as Euro Pound. We have Euro Dollar to the upside, Aussie Dollar to the upside, New Zealand Dollar to the upside, but we have Pound Dollar to the downside. So Euro Pound to the upside has a good chance of working next week, as well as Pound Aussie to the downside and Pound New Zealand to the downside. So I like those three markets outside of the watch list that we have this week. We also have momentum, and we're starting to pull back for this bear flag pattern again. So any deeper correction is simply going to be viewed as an opportunity to look for short positions next week in this market, down towards the next key of support to the downside and the target set at the 1.9058. Aussie Franc, I was looking for a pullback in this market. I am bearish on this market overall. My outlook on this is either to sell it or do nothing, and I was looking for a pullback into the 0.7157. We turned at this level almost to the point here, and so any deeper pullback into this level once again, if you are looking to trade this market, should be viewed as another opportunity to look for bearish reversals down towards the next key of support to the downside of the target set at 0.6990. Just remember, compared to the yen pairs as well, Aussie was showing a bit of weakness, so this may be something to think about next week. Aussie CAD. Now last week Aussie CAD took out its target to the upside at 0.9702. So think about this. We have the Australian dollar showing weakness against the yen, whereas the Canadian dollar is structured to the upside against the yen. And yet when we come and look at Aussie CAD is structured to the upside, taking out its targets to the upside. So what does this tell us? It just underscores the fact that the markets are very, very corrective at the moment. They're very, very choppy. There is a lack of direction across the board. And as I said previously, this is likely because if we're seeing the dollar topping out, this is likely because of that. So going into next week, it just underscores the fact that we really need to go in with a capital preservation mindset until we start to see the markets finding direction again. That's when we want to start allocating more capital. It's not just about knowing what markets to trade, it's knowing when to trade more and when to trade less. Or even in some cases, when not to trade at all. So very simply put, going into next week, the market is structured to the upside and we're starting to form this kind of bull flag pattern. We have some momentum. So if you are looking to trade this market, any correction would be viewed as an opportunity to look for bullish reversals up towards the next key of resistance to the upside at the 0.9787. Aussie New Zealand, like a number of the markets, didn't really do anything last week, just kind of chopped and grinded to the downside, and it actually took out previous lows and started to reverse. So going into this week, this is not on the watch list. I think there are probably better markets out there, but if you are looking to trade this, I can only either short this or do nothing. So any pullback to the 1.08520 would be viewed as the opportunity, if you're looking to trade this market, to start to look for short positions down to the next key of support to the downside and the target set, the 1.0768. New Zealand CAD. New Zealand CAD is structured to the upside going into this week, comes off the watch list. We have some momentum. I would not be surprised if we see higher highs in this market, but I think, again, there are probably better markets out there next week. We've started to correct already, so any deeper correction would be viewed, if you are looking to trade this market, as an opportunity to look for bullish reversals up towards the next key of resistance, the upside and the target set, 0.9040. New Zealand franc, structured to the downside still, but you can see with your eyes another market which is just kind of moving sideways, really lacking direction. We pulled back to the 0.6601, which highlighted previously, and we started to bounce. So if you are looking to trade this, any retest of this area would be another great opportunity to look for short positions. Down to the next key area of support to the downside, the 0.6441. And last but not least, we have CAD franc. For those who follow the forecast, you'll know CAD franc was a really nice market to the upside in Q1. We traded this, and week after week, this was moving to the upside when we had lots of trending markets, paid very handsomely in Q1, and then the market started to dry up and we started to reverse somewhat. So going into next week, I'm either short or doing nothing in this market. I think there are probably better opportunities, but any correction in this market next week would be viewed, if you're looking to trade it, as an opportunity to look for bearish breakouts, down towards the next key of support to the downside and the target set at the 0.7274. So that is it for me for this week, guys. I do go into next week with a capital preservation approach, and those are the markets there that I'm looking at on my watch list primarily. I do quite like dollar week trades as well next week, although we haven't fully reversed in the dollar just yet. But if we start to break lower in the DXY, dollar week trade is certainly something I'll be interested in. And also pound weakness could be a theme next week, as we discussed, as it's one of the few currencies structured to the downside against the US dollar. So as always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far, and all of you who comment on a regular basis as well with really good comments and questions. With that said, I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. Take care, and don't forget to trade safely.